McDonald's just posted strong earnings, with revenue and profits topping Wall Street's expectations. But there's a catch, and it's tied to the financial struggles of low-income consumers in the U.S. in the second quarter. McDonald's brought in $6.84 billion in revenue, slightly beating analysts' projections of $6.7 billion. Earnings per share came in at $3.19 adjusted, again, above the expected $3.15. Net income, $2.25 billion, up from $2.02 billion a year ago. So on paper, the golden arches are shining bright. The company credits the rebound to buzzy promotions like the $5 meal deal, the McCrispy chicken strips, and a Minecraft movie tie-in meal. And of course, let's not forget the long-awaited return of snack wraps, which haven't graced menus since 2015. Early sales there are promising, with franchisees agreeing to keep them at the $2.99 promo price through the end of the year. Same-store sales, which track only locations open for at least a year, rose 3.8% globally, the strongest increase in almost 2 years. In the U.S., same-store sales jumped to 0.5%, breaking a streak of 2 straight quarters of domestic declines. That's a solid turnaround, but not all is golden. CEO Chris Kempczinski was quick to point out that McDonald's is still very cautious about the near-term health of the U.S. consumer, particularly those with lower incomes. According to him, re-engaging the low-income segment is absolutely critical because they're the most frequent visitors, and right now they're pulling back. In fact, visits by low-income consumers across the fast food industry are down double digits compared to last year. So even though McDonald's outperformed its competitors, that drop in traffic from a core customer group is raising red flags. That's why McDonald's is working closely with us franchisees to keep its menu affordable, not just through flashy limited-time deals, but by trying to make core menu items more budget-friendly across the board. Looking ahead, the company expects stronger performance in the second half of the year, especially with easier comparisons coming in the fourth quarter following last year's E. coli outbreak. Outside the U.S., McDonald's is doing even better. International sales are up, with strong growth in countries like Japan, China, the UK, Australia, and Canada. Same-store sales rose 5.6% in the International Developmental Licensed Markets Division and 4% in international operated markets. The brand's value proposition seems to be landing better abroad, where competition isn't quite as fierce. So what's the big picture? McDonald's is riding a wave of smart marketing and global momentum, but at home, there's still pressure. As inflation and economic uncertainty continue to weigh on everyday consumers, even a $5 meal deal may not be enough to attract the most budget-conscious customers. The brand is staying nimble, but make no mistake, the fight for value in the U.S. fast food market is far from over. Thanks for joining us, and make sure to subscribe and enable notifications for more updates on this and other breaking stories.